Welcome back to Crypto Wealthy channel, guys. In today's episode we're going to do something special that we didn't do actually on this channel. We are going to cover the Elliott wave theory on the Bitcoin chart, and it's playing out perfectly fine. So we need to cover some basic rules of the Elliott theory on the chart in order to see if the Bitcoin is actually respecting those waves and if we actually may just bottom out. And now let's begin. Elliott theory is actually the pattern where any kind of an asset could follow and should follow in waves on the charts in the circle. So in this case scenario over here, we do have a perfectly good example of the Elliott theory. Waves that played out, actually the whole circle played out on the Bitcoin chart, and I think the new is beginning, which means that we should actually go on the way to the upside. Now there are some basic rules that we need to actually cover over here in order to see if this theory in this cycle, this last wave theory cycle, is accurate. And now let's see what do we have on the charts. So Elliott theory consists from 5 steps or 5 waves, so let's say, which is also built up from a little steps or little waves, whatever you want to call it, and after that it's followed by correction, which is ABC correction, and this is those red lines that you can see over here on the chart. So if we see the full cycle of the last wave theory circle over here, we can see that it started since we bottomed out on $3,200. In this case scenario, we bottomed out on $3,200 over here, and that is wave 1. Now one of the very important things to include over here is rules that Elliott theory is giving us. So waves 1, 3 and 5 are each composed of 5 smaller waves. So if we zoom in over here, we can see that the first, second, third and fifth are going on the way to the upside. So that's like a bullish pattern over here. So we do have first one until the $4,200, and after that we have also small ones in the correction mode, which is second wave over here, and we didn't exceed the low of the first one. So that is one of the rules that you need to understand on the wave theory. Waves 2 and 4 are usually composed of 3 smaller waves. That is also something that we know. And waves ABC can also follow the 5-3-5 structure. So one of the rules also that is not written on this picture over here is that the lows that are going in correction, like 3 and 2, cannot exceed the previous low. Now usually in this theory, biggest wave in the Elliott theory is actually the third one. So as we can see over here on the chart, we have this third one, which is the biggest one over here, biggest pump that we had after bottoming out, right? And after that is coming the fifth one, which is topping out somewhere around here, almost approximately $14,000. Now when we reached this bullish mode, after that there is coming the correction from $3,200 all the way until the 14 was the wave from 1 to 5 steps. Now it's coming the theory of correction, and this is one of the biggest corrections, and the sellers are taking the control from the market, taking the profits, and after that it's starting the new cycle from 1 to 5, then ABC correction all over again. So if we get back onto the next step, it's ABC correction, and over here we can see the big drop since this peak over here all the way until this round bottoming out that we had in December 2019. Then we had also some sort of a let's say fake out correction in this downtrend over here all the way. Now it's very important also to say that we did not exceed the high, so this is also one of the rules that we need to follow. And after that the price starts to drop recently from 15th of February all the way down to the $3,800 over here approximately, and after that should begin the new cycle of the Elliott theory circle over here from 1 to ABC correct. We are still into this rising wedge formation on daily chart, which is pretty significant and very important because it is on daily chart and it's possible to play out. So we can see over here that we did get some sort of a level of support on 20 exponential moving average, but if we do manage to actually play out this formation, which means that we are consolidating on the way to the upside, and then we are breaking this level of support, this green level of support, which means that we are going to go on the way to the downside. Now you're probably going to ask, didn't I say that we should go on the way to the upside and no on the downside? Correct. Don't forget the second wave over here. As we can see, this is the correction wave, so this is correction of the first one. Now the next thing that needs to play out, if this is the correct cycle over here, we need to see second correction over here as we had over here, not to exceed the previous low. So if we do not exceed the previous low on this correction over here, so this is the big probability that we're going to push on the downside. Maybe we could reach the $7,400 and then push on the downside, but we cannot exceed this low of $3,800 in order to see the next step, which is wave 3, and that's the bigger push on the way to the upside. So to sum it up, if you ask me, I do personally think subjectively, watching the Elliott theory waves over here on the chart, we did bottomed out, because ABC correction is the last step in the wave theory, which means that we will start going on the way to the upside all over again from step 1 to the ABC steps as we did right now, which means that if we did actually bottom out, we should have some sort of a correction over here, then jump all the way to the upside, right, to play out the third and the biggest step, bullish step in the wave theory. After that, we are going into the fourth one to correct ourselves over here and then push on the way to the upside. Now, how big those steps will be, we don't know that. We are just showing you, I'm just showing you over here what the steps should be by Elliott theory waves. So we need to observe the price, how deep price should go after this rising wedge formation over here that we have, how deep correction should be. We cannot exceed this low over here if we want to see higher prices. Bottom line, I do think that you should start getting into the Bitcoin slowly. Now, I'm not your financial advisor whatsoever, and I'm not the professional lawyer or whatever, so you need to do your own due diligence and you need to do your own research. I need to put that disclaimer, but by my opinion, I already started to buying. Dollar cost averaging is the most safest way to actually buy Bitcoin and take some good profits and have some sort of a good average price when you are entering the markets, and also be profitable once we start hitting the road on the way to the upside, which means this theory should play out. So let's see how the Bitcoin will react, and you do your own due diligence and start dollar cost averaging. This is it for today. We did just technical analysis just to cover this theory over here and to cover what could potentially happen with the Bitcoin, and after it happens we need to do technical analysis and to see which strategy actually played out and which strategy did traders followed. Now in the next video, probably tomorrow because it's Sunday, we're going to do some news. We're going to read some news and articles. What do we have into the Bitcoin and cryptocurrency space in general, and to cover the news, but a little bit less with the technical analysis, except if we don't have some bigger picture on the chart over here. Now please don't forget to hit that like and subscribe button if you like these sort of videos, because it really means to me to build up this channel for you. I want to thank each last one of you for watching our videos, ladies and gentlemen. As always, until the next episode, happy trading and goodbye.